Assalamualaikum and hello everyone. Welcome to my channel. I'm Madam Yusna Lisa. Today we are going to discuss question final exam FAR320 question 1 MFRS116, which is on property, plant and equipment. Let's start. Question 1a. Entity applies MFRS 116 property, plant and equipment when accounting for property, plant and equipment. So this is looking at the application of it, and you are asked to state whether the following items does it fall under the scope of MFRS 116 PPE or not. So number 1 is about asset with physical form that are held for sale in the ordinary course of business. So if you can still recall the definition of PPE, right? So if you recall, definition of PPE is about tangible items. Tangible items, and that tangible item is being used for production, supply of goods, supply of services, rental to others, and it was also used for admin purpose. So I just use acronym for it. And it is also being used for more than one period. More than one period here refers to more than a year. Okay. So if you look at what you have here in our question here, question asks about asset of physical form. Yes, ours are physical form, which is tangible item, but they are held for sale in the ordinary course of business. So it was not fulfilling the definition of PPE, because held for sale in ordinary course of business, that refers to inventories. So therefore, this item is not a PPE. Next one, we have another one, an asset that has also physical form. Yes, it fulfills the definition of a tangible items under PPE, and it was held in the process of production. In the process of production, for sale, production for sale, in the ordinary course of business. So if it's held in the process of production, this is again an inventories. Maybe it's a fabric, for example. It was used in the process of production of maybe some kind of shawl, or maybe some dress, right? So that fabric is a physical form perhaps, but it is used in the process of production, and that is not a PPE, right? It is an inventory. Next, we have asset with physical form used in the production, which is fulfilling first and the second definition. As long as you fulfill any one of these 5 that I put here, 1, 2, 3, 4, 5, any one of that is a PPE if it has physical form and it is used more than one period. So this is a PPE, right? Okay, let's look at our next part. So these are the answer for our question just now. Yeah, this one is not a PPE, it is an inventory. Yeah, okay, the last one is a PPE. Next one. Perotiga is a company involved in automotive industry. So that is the principal business of the company. It is located in southern Malaysia, and they plan to expand the business by having another factory building in northern Malaysia. And they have identified the location for the latest branch. And besides factory building, company also needs to have a new office building to run the business. So new office building here, right? New office building that is needed to run the business. So this one, FAR320 acquired that office building, and somehow the factory building needs to be constructed. So the factory building is what you need to construct. Office building is what you can purchase. So factory building will be constructed because it requires special or some kind of specific features. So what they do is they acquired the office building on 1st of July. So let me just put a different color for the event that took place. Office building 1st of July. And then for the factory building, this is for office building. Now we talk about factory building. For the factory building, it was acquired on, go back to the question. For the factory building, it was ready to be used, completed and ready to be used on 1st of December. That was for the factory building. So I'll take green to differentiate. So factory building is in green here. Okay. So that is on 1st of December. So they have different dates. And these are the costs that are involved. So these are the costs for the office factory building. Another one is the cost for the factory building. So factory versus office building. Office building. So we have the purchase price for the office building. So these will be capitalized. Legal fees will be capitalized. And then consultancy fees paid to SmartClick. So there are some information about consultancy fees paid to SmartClick. That also consists of consultation to FAR320 Berhad for the acquisition of office building amounting to 470,000. And also consultation on training new factory. So for this one, no problem. It was consultation to acquire the office building. So no problem. So you can capitalize. But for the 400,000 that were mentioned there, that was not for the case of to be capitalized, because that one is to provide training. So this one is to provide training, so you won't capitalize. So this will be expense off. Okay. But this office building, it will be expense off. For the office building, for the office building, this one will be capitalized. That was just to clarify what was mentioned here. So this is just to tell you this is being capitalized. The material cost included, material cost to construct the factory building, that includes an excessive wastage, some extra that you have bought and you do not use it. So that is 800,000, and this 800,000 must be reduced against your initial costs. Yeah, against your initial costs, right? While the labor cost has already excluded the idle capacity. So in the labor cost here, 4.5 here, that you do not need to do any adjustment. You just leave it as it is. But for the material cost, you may need to go and adjust with the 800,000. Here you need to go and adjust. Here you do not need to adjust, just as it is, right? Useful life of both office building is, they are having the same useful life, 50 years for both office building and factory building. So they have the same useful life. Okay, so for both. Next, let's look at what we have here. So for the general and admin, of course, this will not be included, right? This will not be included. Maintenance cost per year will not be included because these are revenue expenditure in nature. And then you have your your, or was it your another item which is also for maintenance, but that relates to the maintenance of the factory building. So the maintenance of the factory building, maintenance of the factory building here will also not be included. So contractors' fees will be capitalized, right? Contractors' fees will be capitalized. I'm just trying to put the correct color here. Okay, not included. This one will be capitalized. So let's see how is the calculation for our initial costs. Okay, these are as what we have discussed. Just bear in mind, just now there was the case of trade discount as well in the question. If you don't realize, let me just show you. Yeah, there was a trade discount of 5% here, and that trade discount of 5% here, right, 5% is for the office building. So blue color for office building trade discount. So that must be deducted. Okay, next one. Okay, so here you have the detail here. Trade discount, the legal fees, consultancy fees, right? The one that is for factory building will not be included because that is for training purpose. Material, you go and deduct the excessive portion, right? Therefore you got 8,002. Labor, no adjustment because that has already excluded, right? What was it? The idle capacity, if I'm not mistaken. Let me check again. Yes, excluded the idle capacity, right? And the last one is installation and technical costs. That has to be. So the total for the office building and factory building was 35,820 million and 27.2 million respectively. Now we go to the next one. Pro10 purchased a machinery costing 500,000 on 1st of January. 500,000 1st of January, and the machinery were depreciated 10 years. Yeah, over 10 years. And they spent 10,000 per annum to maintain. So this is just to maintain the performance. So this will be excluded in the cost of the machinery. So this is excluded. And this is an example of subsequent expenditure. And then to 1st of January 2018, after 4 years, the machinery broke down. So the machinery broke down. Detailed inspection found out that one component is to be replaced. So you need to replace a component. And the carrying amount of the replaced component, meaning that we are talking about the whole component, was 5 million. And they incurred replacement cost. This replacement cost of 8,000 here is for the new component. After the replacement took place, there was an increase in the output. So after you replace it, there was an increase in the output. So meaning that has increased the future economic benefits beyond existing standard or existing performance. So that has to be capitalized. So what you need to understand is that this 10,000 will not be capitalized, it will be expense off, but this 8,000 will be capitalized because they improve the standard beyond the existing capacity. That is improving its output, improving capacity, yeah, the number of outputs. Next, so let's look at the requirement. Explain the accounting treatment for the cost of the new component. and also for the maintenance cost. There are two things here. If you were to explain, you just need to write sentence, and that sentence should be in line with the requirement of MFRS116 pertaining to subsequent expenditure. The replacement cost will be capitalized because that has increased or enhanced the value of the PPE. It increases or enhances the value of the PPE. And then next. Okay. The maintenance cost, it will be expense of. Why? Because it is just incurred to maintain the performance without improving the standards in a way that enhances the value. So this will have to be expense of as incurred in the year. So this is the calculation for depreciation for that year. So if you look, the cost as at 1st of January was 500,000. And you have to consider the new component. Before that, take out the depreciation for that component, for the asset, which is the cost on 1st of January 2018 is 500,000. So it has to be divided by 10. Why 10? Because it was the estimated useful life times 4. Times 4 is from the date you have acquired the machine, 1st of January 2014 here, up till the date you do the replacement here, 1st of January 2014 up till 1st of January 2018. That was 4 years, right? So after that, that depreciation related to that item will have to be removed. So this one must be remove or eliminate, right? Eliminate. So therefore, you remove that. This is the carrying amount of the old component, old or the existing item, and therefore new component 8,000, right? So you add with the 8,000 and you minus the carrying amount of the old component. So this is the carrying amount of the asset before any replacement. Before any replacement, it was 300,000. You add the new component 8,000. Remember that was capitalized, and the carrying amount of the old component that is to be replaced is 5,000. So your new carrying amount after the replacement is 303. So after the replacement of component, depreciation will be provided based on the new carrying amount 303 after the replacement. So 303, yeah, divided by 10, the remaining useful life, and then is actually 6. Why 6? Estimated useful life minus the years that you have used, which is 4 years, right? So you have 6 remaining useful life, 50,500. So that 50,500 is the depreciation expense for the year ended 31st December 2018. Okay, that's it. We will continue in our next part of the video. I'll see you in the next video.